Welcome to Momentum Monday. Today is August 11, 2024. So last week began with a huge gap down. Most people say it was due to the reversal of the yen carry trade. But that opening print here on Monday ended up being the low of the week. Buyers stepped up immediately. And we saw a bounce across the board. Obviously, as you can see here, all major indices are still in a pattern of making lower highs. And the way I see things, as long as they remain under their declining 20, also their declining 50, probably it's going to be a tough tape, very volatile tape, and tape where one needs to be very nimble and take profits quickly and be ready to play both sides, the long and the short side. So last week we saw a pretty significant bounce, but there is still room for more. So we'll see if there is a follow through this coming week. And I'm especially interested in a potential follow through in semis. Look at this tight range inside day on Friday. So there is a chance for a follow through earlier in the week, and I will be looking for a test of the declining 20-day where potentially people who bought here will be looking to take some profits, and people who want to open new short position will probably be looking to open positions here, just because the risk to reward here near the declining 20-day is much better than, for example, here when the stock is, the index in this case is so extended from its declining 50 and 20-day moving averages. The silver lining behind the latest correction is that we continue to see stocks that gap up on stronger than expected earnings and even follow through. And this is what leads me to expect that this is just a temporary garden variety correction, not something deeper and longer and nastier. Obviously, we never know in advance, but just judging by the price action in so many stocks after they report earnings, I'm thinking that this is just a temporary correction that will end up being a buying opportunity at some point. Obviously, there are a lot of moving parts at this point, including we have elections in November, and when there is a huge uncertainty regarding presidential elections, the market is a bit worried, and it could have a deeper pullback. And as of right now, from what I've seen on the polls, it's like 50-50. It's not really clear who would win. So we'll probably the tape will probably remain very volatile up until the rest of the year, really. But speaking of earnings, there are a few sectors that I wanted to highlight that I think that have the potential to remain leaders. At least they're currently showing relative strength, and typically stocks that show relative strength, and by relative strength I mean stocks that are going sideways when the average market is going down, or even stocks that try to go up when the market is going down, they tend to outperform when the general market bounces. So the few sector I wanted to highlight is cybersecurity. Last week we saw PLTR gapping up on earnings. I mean, it wasn't anything big. It wasn't a big earnings surprise, but the reaction is what matters. They gapped up, and not only gapped up, but also followed through and closed almost near all-time highs. This is a very positive bullish market reaction. And then a few other stocks in the same cybersecurity space. We had FTNT gapping up, and kind of holding its gap, potentially bull flagging here and setting up for a potential continuation later on. As you can see here, I mean, it's a pretty sizable earnings surprise, almost 40% earnings surprise. And then the other one, CyberArk, also significant earnings surprise, gapped up and followed through on Friday, kind of setting up on a bigger time frame here too, even on a weekly. So this is a really hot sector, cybersecurity. I mean, it's been a hot sector for the past few years, but as of right now, it's showing relative strength. Another one is e-commerce. Shopify gapped up after better than expected earnings and follow through. It's still below its flat 200-day moving average, and typically those types of setups tend to be very choppy. But look at this volume reaction here. So this is bullish. They had a relatively big surprise, 27% earnings surprise. And then some of the other e-commerce plays like Coupang, which is a Korean online retail platform, also broke out after earnings, and it's kind of setting up here near its 52-week highs. It's a huge base here, right around 23, 24. And Meli, which is the Amazon of Latin America, broke out to a new 52-week highs and also showing notable relative strengths in this volatile tape. And it's interesting that probably the strongest company out of all, Amazon, is still below its 200-day, but I wouldn't really bet against it for too long. So it's probably going to set up again. Here, if you look at it on a weekly, it's not looking as scary as on a daily. The whole e-commerce space seems strong, so probably the dips in Amazon are a buying opportunity. Obviously, that depends on your time frame. Another group that stood out were restaurant. Here is Sweetgreen SG. They actually missed earnings. And when you see such reaction after missing earnings, you rather should light up. So it closed near its all-time highs here on strong volume, despite missing estimates and despite continuing to lose money. But the market is accumulating these types of shares right now, and other restaurant stocks are also acting strong as of late. We have Shake Shack gapped up on earnings, pulled back to its 50-day where it found support, and now it recovered again. Cava is another one, the Mediterranean chain, big breakout above its 50-day on Friday on decent volume, showing relative strength. As you can see, its relative strength line here keeps going up. SMG Chipotle is trying to find some support near its rising 200-day moving average. Potentially, it could test its declining 50-day if it follows through. And other than those three groups, there are many individual stocks that are just acting constructively and building bases in this choppy, volatile tape. Stocks like TMDX. As you can see here, you can really tell that there was a big correction in the general market. There's just been consolidating above its 50-day moving average. Another one, ALNY, Alnilam, also gapped up on earnings and setting up near its 52-week highs in a tightening range, setting up for a potential continuation. Eli Lilly, with a big earnings surprise, 43% surprise, gapped up, followed through on Friday, one of the strong names in the past year. So there are quite a few names. This is why I'm thinking that this is just a garden variety correction that will eventually end up being a buying opportunity. But there are a lot of other moving parts right now. So personally, I plan to remain nimble and just focus on shorter term trades, intraday, some short-term swings. But there is something for everyone in this tape on both the long and the short side. And typically when the market is in a correction mode, when it's a lot more volatile and the daily ranges are much bigger. So it definitely provides great opportunities. You can capture the same amount of points in a day that you need multiple days in a bull market. So it's a good trading environment, especially for the summer months. So that's all I have to say for this week. See you next week.